Good evening. My name is Steve Blazejewski, and I'm here to talk about my capstone project, which is tokenization of real estate investment funds. I work in institutional asset management, predominantly in real estate, and this is a real problem that we actually have. And I'm actually on a working group within the office and the company that is focused on this type of thing. So it's very appropriate and timely to be talking about this. And I think what I'd like to do is start off with really defining the need and a couple of problems that I see in our industry. And number one, the institutional investment world has always historically been funded by public pension plans. These are the large state plans, CalPERS, CalSTRS, University of California, frankly. And those types of pensions, as everybody knows, really are becoming a thing of the past. And so as we look to the future, we see, the future of institutional asset management and the capital flow coming from globally, other countries, sovereign wealth funds, et cetera, as well as private wealth, high net worth individuals, and then ultimately, obviously, also on defined contribution plans, 401ks and whatnot. And so we need to find a better methodology to access those investors. Otherwise, the sector and the institutional asset management class is going to face problems down the road. Number two, as I think about the broader spectrum of real estate and the broader environment, I think you need to make real estate investment much easier. Historically, it's been very illiquid. It takes a lot of money to make any sort of real estate investment, and that becomes problematic. And so, referring to problem number one, as I said, trying to access high net worth and private wealth is going to be important, but not just them. I think every investor, in the block should be able to invest in real estate, and tokenization specifically is an opportunity to access those types of people. And so I spell it out here simply. If only there was one way to address both these problems to make real estate investment more nimble, liquid, and easier to invest. And I think one solution to do that is blockchain. And so, as I say here, blockchain to the rescue. And we say this for a lot of reasons I've studied throughout this class. Obviously, as you see some of the points here, it's liquid, it's immutable, it's pseudonymous. And I think most importantly, as I mentioned earlier, access to the masses. It's scalable. So unlike investing in a commercial real estate building where you need millions of dollars to invest, in this case, perhaps you can do incremental investment, maybe as small as $1,000 or even smaller through use of a crypto type currency and tokenization in general. Then I think finally, an important point here has to be the lower costs involved. Paying lawyers, paying title companies, paying all those types of people to actually conduct a real estate transaction, very consuming, very expensive. And so tokenization seems to be a likely and interesting opportunity to overcome those challenges. And so what I'd like to really focus on is tokenizing a fraction of an existing fund. If we're going to raise $1 billion, then I think there's an opportunity to actually raise part of that money through tokenization. And so it doesn't have to be the entire fund. Perhaps it's $250 million of that $1 billion fund. Again, you can use increments, and I think you could make it very accessible to a lot of different people, and it could be a very compelling opportunity. Obviously, this would use a distributed ledger. I think smart contracts is probably the most logical way to do this. And then what we'd like to do is essentially bundle all those smaller investments up through this tokenization project into a single feeder fund, which could then ultimately feed into a traditional investment fund. We actually have something like this already in our business, and we have high net worth feeding in, but they're feeding in through traditional real estate investments in the form of special purpose entities and things like that. And so this would be a major shift there, again, to make it far more accessible to different people. There are companies out there doing this type of thing as a fee for service. Tokeny is one that comes to mind. It's a group that we're talking with professionally right now, and I think there's an opportunity there to ultimately leverage parties that are already out there. I think it's possible that while we're looking at only doing a part of a token or a fund this time, it could be ultimately much broader scale, and we could do the whole fund, through tokenization and ultimately eliminate that feeder fund. So the ecosystem right now, you really have REITs, you have direct in real estate investment, which we've already covered. And, I think the outlines, the pros and cons here are already mentioned. There are going to be other funds that are tokenized. It's certainly going to happen. It's going to accelerate. I don't think that's, a limiting factor. And I think, frankly, we could have a first mover advantage if we're out there in the market right now. But since the entire market is going this way, I don't really see this as a major challenge going forward. And then finally, a couple of risks of this. SEC regulation, that's no different than current real estate. It's going to be good and bad, and it's going to, at the same time, provide some structure. I think the biggest issue, as we talked about, is going to be hacking, attacks, and data privacy. But frankly, this is no different than other online commerce. and it's going to be controlled much the same way other blockchains are, through security tokens and diligence, and ultimately use of multiple gateways through this blockchain. So with that, I'll conclude. Appreciate your time and your consideration, and look forward to speaking with you again. Thank you very much.